This is a teacher Haris Bhatt, and we are solving a question from marginal costing. And this question has come in AS Accounting, paper 2, and the topic is marginal costing. Okay. This question has come in which year? Let's see. That is in May, June 23-21. So May, June 23-21 is going to be the question which we are going to solve. So first of all, at the other factory, a single product X is currently being made. Marginal costing is used at this factory. Okay, that's fine. And the data is given. Selling price per unit 48. Contribution per unit is 13. Direct labor 2.5 hours per unit at the rate of 10 per hour. That is 25. Fixed cost 96,000 per annum. Factory capacity 28,000 labor hours per year. Current production level is 80% of the factory capacity. So let's first of all units produced are sold, but the problem is this, that units produced and sold are not given. So we can find that. How? How we can find that? Let's see. 28,000 labor hour is the capacity, and currently we are operating at which capacity? 80%. So calculate 28,000 into 80%. So we are currently using 22,400 hours. And with 22,400 hours, how many units we can produce and sell? The units produced and sell is equal to, on each unit we are taking 2.5 hours. So 22,500 hours are used, divided by 2.5, because each unit will take 2.5 hours. You will get the units produced and sold. That is the main important point in this question, that units produced and sold are not given. So now we can find that 22,500 hours are used, which is 80% of the factory capacity. And every unit take 2.5 hours. So it means that 22,400, I think so, is the, can you calculate again?
8960.
Yes. So 8960 is going to be the units which are currently produced and sell. 22,400 divided by 2.5, which is the labor hour per unit. So 8960 units we are producing currently. Now let's see what is the requirement of the question. Calculate the profit made each year for product X. What is the profit we are getting on product X? So let's calculate. We are going to calculate the total contribution directly, because we don't need to find sales less variable cost. Why, sir? Because contribution per unit is given. So I can use a short version, short passage. 8960 multiplied by 13, we will get the total contribution. 8960 into 13, that is 116,480, and less fixed cost, we will be able to find the profit. So less fixed cost. What is the fixed cost? Let's see. Fixed cost is 96,000 per annum. So subtract 96,000, we will get the profit for the year, for the current year, for each year. That is 20480. So profit is going to be 20480. So we are done with that, with the first part of the question. Calculate the profit made each year for product X. The director planned to make a new product Y, at this factory at the request of an important customer. The following details are available. Now we are going to produce another product Y. The factory will be able to operate at full capacity. And what is the full capacity? Let's see. 28,000 hours now we can use. Previously we were using 28,000 into 80%, which is 22,400. But now we can use all 28,000 hours, and on each unit we are consuming 2.5 hours. So divided by 2.5, we will get that is the factory capacity in units, and we are able to produce the whole factory capacity. So that is 11,200. So the production volume is now 11,200 units we can produce, right? All units produced will be sold. Okay. Product Y will have a selling price of 64 per unit and a contribution of 8 per unit. Product Y will require direct labor at $10 per hour for 1.5 hours per unit. The customer requires 10,000 units of product Y each year. The customer will only accept this quantity each year. So it means that we are able to produce 11,200, but we will produce only 10,000 units of product Y In order to complete the customer's order, production of product X will be reduced. So we are basically reducing the production of product X to complete the order for the product Y. Because we can produce only 11,000 or 200 units currently, which is our capacity. So some new machinery will be required, costing 36,000, which is depreciated 20% per annum. A loan of 20,000 at 5% per annum will be taken. Interest will be required to finance the purchase of the new machinery. So we are paying interest also because 20,000 loan has been used to purchase the machinery. Calculate the total profit from both products, which will be made in the first year if this plan put into operation, right? So 5 marks are there. So we are supposed to find the total profit on both unit if the plan will be, we are going to go for this kind of a plan. So let's see. So let's calculate the sales of product Y first. I'm going to calculate for product Y. And we'll see about product X afterwards. So product Y, the sales are going to be 10,000 units because the customer has given you order of 10,000 units. And what is the selling price of product Y? 64. So we can multiply it with 64. Rather, we can find the contribution directly. I'm sorry, because contribution per unit is given. No, contribution per unit is given, but if you just see that we have been given also that product Y will require direct labor at the rate of $10 per hour for 1.5 hours per unit. So this is very important actually. So let's see. I will first calculate the contribution and then I will move back towards the question. 10,000 multiplied by 8 is the contribution per unit. Let's see. 10,000 units and contribution per unit is 8. So the total is going to be how much? Total contribution for Y is 80,000, right? Less fixed cost. Fixed cost for Y is, in order to complete the production, product X will be reduced. Some new machinery will be required at 36,000, right? So the total fixed cost will remain the same, which is 96,000, but some fixed cost will increase, depreciation on machinery and interest on loan. So let's calculate that. Depreciation on machinery and interest on loan. And the other fixed cost जो हमारे पास है, that will remain the same. So what is the depreciation on machine? Calculate it. 36,000 into 20%. We are 7,200, right? And I think we are supposed to find total profit for the whole first year. So it is not monthly. So we don't need to go for the calculation of month calculation. 7,200. And interest on loan on 20,000 is 5%. So 20,000 into 5% is going to be 1,000. No problem. Let's wrap it up. 7,200 and 1,000. So depreciation on machine is 7,200. Interest on loan is 1,000. The remaining fixed costs will remain the same actually. Now, the most important part of the question is this, that if we are producing 10,000 units of Y, then how many units of labor has been already consumed? Y is going to take how many hours per unit? 1.5 hours. It means if you have 28,000 hours currently, 10,000 multiplied by 1.5, we will get how many hours? 15,000 hours are consumed for the production of Y. Now, 28,000 minus 15,000, how many hours are available to produce X? 13,000. And on each unit of, for each unit of X, we are basically consuming 2.5 hours. So units of X which we are going to produce is 13,000 hours are available, divided by 2.5. We will get that much number of units can be produced for product X, that is 5,200. So product X is going to be produced for only 5,200 units, right? So now I can calculate the contribution and the profit for product X. The contribution is going to be 5,200 multiplied by contribution per unit for product X. Let's go back. The product X is how much? 13. So 13,000 into 5,200 into 13 is equal to 67600. Okay. Now we can go for the total contribution of both the fixed cost, which has already been incurred. That is going to be how much? 96,000, right? So let's go for the total contribution, 80,000 plus 67600 for both products, because we want to find total profit for both products. 80,000 plus 67600, 147600. Less fixed cost, total fixed cost, that is 96,000 plus 7,200 plus 1,000. 96,000 has already been incurred, and because of product Y, we are increasing the depreciation with 7,200 interest on loan at 104. 200 is the total fixed cost. So we'll subtract it. So we'll find the profit for the year, calculate it.
So 43400.
43400 is the profit for the year. So we'll go with the option 2, because in that case, we are also basically engaging the new customer. We are basically launching a new product. So our product, what should I say? Product base has increased, and more customers are attracted towards the product for our product, because we are producing two types of product, X and Y. And Y is also giving us a healthy contribution of $8 per unit, and we are meeting the customer order also. So it means that in future, maybe he will ask us to produce more units of Y if need be. And Y's contribution overall, because there is no increase in fixed cost in option 2. Fixed cost will remain the same. That will be 96,000. So in addition to X, we are producing Y, which will increasing fixed cost by 8,200 only. So the profit we are getting from Y is too much. And because of that, we are reducing the production of product X by almost 4,000 units, which was 8,960 in the past. 5,200 into 13. And the overall profit has also increased, because while producing X, we were only getting profit of 20480, but now we are getting 43400. So profit has almost doubled. And we are also being able to produce another product. Though we have to go for an outflow of machinery, and we'll take a loan, right, which has to be repaid at some stage, obviously. But we are basically increasing a non-current asset also, and machine will subject to depreciation. So depreciation expenses will also increase, and there is a life of machine also. So maybe we have to purchase machine again after some years, because the machine will become life after the useful life, it will become 0. And second thing is this, that product Y is also taking less hours. And if we see that we are having limited hours, we are just having 28,000 hours, and product X is basically taking 2.5 hours per unit, where product Y is taking 1.5 hours per unit. So it means it is a better use of direct labor hours if we are going to produce product Y also with product X, because the customer retention will also be there, because we are able to satisfy some of the customers of X also. But on the other side of the picture, maybe customer will become unhappy, and it will give a bad impact on the customers. The labor of product X, which can produce only product X, they will become redundant, obviously. That will also give a bad impact. But overall, if you just see, we'll go with the option. This plan put into operation. Point number 5. Advise the director whether the plan should be put into operation. Justify your answer by both financial and non-financial factors. I have discussed with you that you should go for option 2. Fine. Let's move on to the next question. That has come in, again, the marginal costing, and it is in May, June 23-22. Let's solve that. At a second factory, marginal costing is used. Sir, why the question starts from behind, between the question? Because it's these both papers in which we have absorption and margin together. So we are only taking the part of marginal for the solution. We are not going for absorption. So that is the reason that we are seeing like this, that at second factory margin costing is used. Single product X is manufactured. However, demand for this product has fallen recently due to increased competition. The following information is also available for product X, direct material, direct labor, and contribution is also given. So we can find the selling price, contribution plus. Have we done that question? 20 plus 60 is the selling price. Have we done that question? Remember, calculate the profit for the year. So 14,200. Yes, we are done with that. At a cost of 11 per month. We are done with that. So let's move to the next part. So here it is. This question has come in February, March 24, 22. So let's do that. February, March 24, 22. February, March 24, 22. K Limited uses marginal costing of another factory where a single type of product is made. Selling price is given 42. Direct material, direct labor, and other variable costs are also given. Currently, the factory is producing at 9920 per month. Fixed cost is 38,200. And the director plan to increase by changing the selling price. They are considering following two options: reduce the selling price by 5%, increase production by 4,000 units on the current production level. I think we are done with this question also. We are done with this question also. So now you can do May, June 21. Just I want you to solve that question at home, but little part I am going to solve it for you. That is, he's saying calculate the number of units to be sold for the company to achieve the target profit. Target profit is 40,000. So what we are going to do, target profit is going to be fixed cost plus target profit divided by contribution per unit. This is the formula for target profit. Fixed cost is 112,000 plus target profit is 40,000 divided by contribution per unit. You can calculate 48. 4.5 into 4, how much it is going to be? 4.5 into 4, how much? 8.5. So 48 minus 8.5. Here 3 into 8.5. That is the direct labor per unit. 25.5. ये गलत किया आपने, दोबारा करें. 4.5 into 4. Into 4. 18. 18 minus 8.5 into 3 is 25.5. Right? Now calculate the contribution per unit. 48 minus 18 minus 25.5. 4.5 is the contribution per unit. So you will divide 1,12,000 plus 40,000 divided by 4.5. So that is going to be the number of units that could be sold to achieve target profit along with the fixed cost we'll cover. 33778. 33778. So we are able to produce 33778 unit. We are able to enable to cover fixed costs also along with the target profit of 40,000. But currently we are only selling 30,000 units. So we are not up to the mark. We are not able to achieve the target profit currently. So prepare a budgeted marginal cost statement. You can calculate that easily. The director have been demanded for their product is likely to fall in future. They are considering two proposals, proposal A and proposal B. Okay. So I just want you to solve that question at home. And I've already uploaded this video for this particular question. So that's it. Thank you very much. Inshallah, see you in the next class. Okay.